the copper prices, as our anchor Rashad was just talking about, have been pretty range-bound for most of this year, and the copper bulls are kind of giving up, right? Is there an impetus going into the second half of the year for a price tick upwards, perhaps to 6,000?
That could be. I mean, I think the fundamentals for copper remain quite solid, despite the variations that you may see, from day to day or month to month. I think what we're seeing here in China is that physical demand is quite strong. It's staying its course. And also there's been interesting discussion, these days around clean energy and clean transport. And what we're seeing is that there's more demand, more copper going to be required for electrical vehicles, for renewable energy, solar, wind panel energy. So I think all of that, reads well for copper going forward. So I think the fundamentals are intact, very good.
We'll get the housekeeping away on the prices. I mean, I was just looking at I have to use my glasses here in the Bloomberg terminal. They're about $2.53 a pound now. Where could that go? $2.60, Barclays says, in the second half?
I think it's probably going to go up, but I would see a progressively increase in price as supply and demand tightens. I think this year we're expecting a market that's going to be largely balanced, and therefore we would not expect to see very significant swings in prices in the second half. But I think as you look in next year, things will tighten up more. And therefore, we think prices will start to strengthen from there onwards.
You talked about the need for EV, electric vehicles here in China. They need a lot of copper, as we know. But what are you hearing from your customers in China here, and even at this conference, about what the real demand in the real economy is?
Yeah, the physical demand for copper, we're seeing that stay its course quite strong. And that's driven by, the property sector, but also transport, the power grid construction, which is taking place, and then simply consumer electronics and appliances. So we're seeing quite a broad base of, growth, which is driving copper demand going forward, and we think that's pretty healthy.
Now, are you seeing sentiment being a little bit negative with the tightening of credit, and also maybe the fact that in the first quarter growth may have peaked a bit?
I think what we're seeing is that some of the debt restructuring and economic stabilization efforts that are taking place in some areas, may imply, some more restricted growth. In some, for example, property sector, in some, cities, tier 2, tier 3 cities maybe, but nothing that will change or override the fundamentals, which I think remain quite strong.
Now, we've been hearing a lot about mine disruptions, yet supply doesn't seem to be affected. Why is that?
We had some disruptions which were significant at the beginning of the year. I mean, we had a strike at Escondida, we had export ban at Grasberg, and we did see a peak in price at that time. I think those have, to some extent, some of them have, are behind us, and therefore, we think those effects have been absorbed by the market.
Right.
But again, as we look forward beyond this year, we know we're going to see a market that we think is going to tighten up.
Yeah, that's right. Supply growth, though, has been kind of stalling because not enough mines out there, not enough new mines, right? Do you see at what price do you think the industry needs in order to justify investing in new mines?
Yeah, if you talk to most of the analysts, they would place the inducement price, which is required for new mines, probably in the range of between $2.80 and $3. So at current spot prices, we're not there yet. But as you rightly say, it's been difficult to get new mines, and the pipeline going forward is quite dry. Actually, most of the construction work that took place in new mines in the last couple of years has been already absorbed by the market. Very
quickly, what's the M&A front this year? I know BHP has been peddling Cerro Colorado mine. Is it something you've looked at?
Not of interest to us, maybe of interest to others, but not to us. We purchased Zaldívar last year from Barrick and a 50% stake. We've been running that mine very successfully, and we think it's one of the best operations that has been placed in the market.